I have to admit, my investment philosophy and some of my opinions run counter to what other mutual fund companies are telling you, or aren't telling you, as the case may be. But we need to get back to basics, to connect investors to professional money managers as efficiently as possible, so you can get back to the business of making money, to design funds that allow managers to do what they do best, and to cut through the noise and speak simply, clearly, and honestly about the realities of investing, so you're prepared for the rewards, the risks, and even the occasional bear. Lately, mutual funds have been getting a lot of bad press. And you know what? I think they deserve it. Our industry is getting fat and out of shape. Fees are inflated, portfolios are over-diversified, and fund managers are more focused on tracking the market than actually making money. But it doesn't have to be that way. I still believe that a mutual fund is the most efficient and effective way to invest your money, if it sticks to the essentials. At its most basic, a mutual fund allows a group of investors to come together and pool their assets. By doing so, they share in the costs and get all the benefits of a diversified and professionally managed portfolio. If it's done right, it's a beautiful thing. Do you need a broker? Are you a direct investor? This is a question we all have to ask ourselves when making investment plans. Using a broker costs more, but direct investing isn't for everyone. So how can you tell if you're ready to be a direct investor? Well, are you actively engaged in managing your own portfolio of funds? Do you want to understand what your fund company is doing? Do you care about the fees you're paying? And would you rather buy a fund than be sold one? If you said yes to these questions, then I think you already know the answer to my first one. Cutting out the middleman can save you a lot of money over the long term, enough to have a real impact on your retirement, and maybe even allow you to buy the occasional fur coat. As the popularity and availability of index tracking funds continues to grow, I found myself asking whether investors should use professional money management at all. Do active managers generate enough additional return to justify the cost? I say the answer is yes, but only if it's done right. With active management, you can beat the market, as well as smooth out some of the ups and downs. But the key is finding investment managers with the right experience and investment philosophy. Managers who concentrate on their best ideas, focus on making money, not just tracking the market, don't trade too much, and are in this for the long term, not just the next quarter. Managers who are successful because they're not afraid to break away from the herd and go their own way.